Hi guys, welcome to CrypoFros, people, the chart analysis part of this channel with your host Jeremy here. Today we'll be taking a look at market structure and how to determine valuable P.O.Is in the market, which could serve as a point of entry or exit in the market for successful trades. So basically the market structure made simple for y'all. I hope y'all gonna enjoy this video. Market structures are otherwise called support and resistance areas in the market, meaning support areas or levels in the market where the price action finds enough buying power to prevent the price from going lower. Resistance levels are where there is too much selling pressure that prevents a given level to be broken out, therefore not allowing the price to hit higher. So once you determine your levels of support and resistance using a top-down analysis, meaning starting from a higher time frame down to a lower time frame, you will be able to determine whether the market is making a downtrend, hence forming lower highs and lower lows, or an uptrend, meaning higher highs and higher lows. Essentially, the higher time frame sets the tone for the smaller time frames. So now y'all gonna ask me how to enact smart money concepts based on this knowledge. Well, the important thing is to identify the sell before buy or buy before sell candlestick in the structure. From a bigger time frame down to a 15 to 5-minute time frame, if you go lower, you're always running the risk of missing out the entry. Now, spot the desired P.O.I that sponsors the impulse move, breaking the structure. This one will be the one the whales and big players will be looking at to bring the market down in order to mitigate their losing position before going back the opposite direction, basically. So now let's take a look at some examples and trying to find entries and determine exit levels on this Axie chart. Axie Infinity, which is a very popular project that a lot of y'all might have heard about, which is a play to earn game that a lot of people have been making thousands of dollars playing it from, or even just investing in it, making millions. All right, so if we scroll back to past price action, we can see that the price of Axie Infinity was really low to, well, what was that, 16 cents, whatever. Okay, it just skyrocketed like crazy all the way up to 165 dollars. So here we can see basically you'll always be determining the P.O.Is, the key level, the key point of bouncing point, otherwise called, I'm calling it that. But yeah, you will determine your levels of support in the way up and your levels of resistance in your way down. So as you can see, the market or any trend is not going up in the straight line. It's going up and down, just putting in higher highs and higher lows. And so therefore, when it retraces, it creates points of resistance that you can, if you zoom in and you study the chart enough, you will be able to determine where the interesting P.O.Is are in this downtrend, that the price will be, coming back. One coming back up will be coming to hit. So let's take a look at that. So here we can let's go to the most recent moves on the chart. So we see that we've been going down quite a lot, quite significantly. So now here we're going to be looking for points of retracement to the upside. So as we can see, the market has been going down quite a lot. So here we'll be looking at P.O.Is levels where the price could potentially rally back up to. All right, so let's square it up here. We got one, top, lower, like equal low, head and shoulder pattern, retail trader pattern here, neckline here. All right, you guys can see it. Second shoulder, so the impulse move would be around there. We will zoom in to find it. Then break of structure here, lower low, lower high. So in this lower high, we get another POI right there. We'll zoom in and narrow down these candlesticks to find the POIs. Gonna have another one around there too. All right, so within these areas we'll find like some very important key levels where the price of Axie Infinity will most likely rally back up to when the bull market will start again. So now let's take a look at real quick, because we see that we are definitely in a downtrend, and when we look at it here, we see that there's another structure point here. So let's just highlight it. So this is a nice support. We'll put it in another color. Let's put it in blue so we can differentiate it from the other POI levels. So we can see that we haven't quite broken the structure here. So the structure is still pretty relevant. However, if we were to break down this line, there would be another break of structure. In this case, the buy before sell candle fueling the move that would break the structure here would be the next point of interest that we would be looking into by zooming into it and refining. So now we want to see where the market and the price action could potentially, if it were to head further down, where to it could touch and retrace. So we got something here, some sort of a low here, and another one here on a daily basis, daily time frame. Okay. So now let's zoom in. So like now that we drew up these POIs, these POI lines here, the green lines, we know that if the market keeps heading lower and were to put on a divergent signal on the RSI, we know that it would probably be within this area of demand. All right, and it would be putting in a lower high, lower low, sorry, pardon, excuse my French, guys. So we could potentially do something like that, huh? We don't know yet. Potentially put on a lower high, a lower low, sorry, lower high, lower low, and start retracing from there to where we don't know, but most likely to some of the POIs that we would have highlighted earlier on. Most likely retracing to some of the POIs that we highlighted earlier on. And putting on a higher low here, as it puts in a lower low here, confirming the divergent signal on the RSI. That's what we would be looking for here. So now let's zoom in. Let's get excited, guys. It's almost time to make money, man. Got a good feeling about this shit. All right, pardon my French again. All right, let's start with the first one. Damn, son, it looks like this one might be the one, actually. Oh, look at that, man. Wait, look at it. Look at that. It almost touched it. Right there. Not quite. Huh, that's pretty bearish. Okay, so zoom in some more, zoom in further. So let's refine the little square because we know that is around here. So let's narrow it down. So hold on, guys. So I know I said I highlighted some little squares on a downtrend, all right, but because we were on a daily time frame, we can see less clearly as well. So within the trend, you'll find different P.O.Is, all right? So we need to find the last move up that kind of faked out the market into thinking that it was the reversal point before it started to drop lower. So there's definitely a break of structure here. Definitely, I don't know. No, there's a bounce and break of structure. So the last move up before the down would be this one. A lot of people would say, all right, okay, I understand, I agree with y'all, right? But in this instance, we could expect the price of the coin to bounce off to the downside from this level here, and then whatever consolidates, hit higher, and then bounce again from there. Consolidate again, break out, and go to the next point offer, all right? So these could be points where you could, I don't know, set up like short plays or target prices from your long to exit in anticipation of the price to go down from there to a given percentage. So a lot of people might use, I don't know if it's just adding up too much information to the video here, but I'll still do it anyway. Some people might use the Fibonacci retracement tool to determine where to the price is most likely to retrace down. So if this were to be the P.O.I where the price action would come hit and touch before dropping down lower, this would be considered the top of the Fibonacci, the top of the price action. And so therefore we'll withdraw our Fibonacci tool that way, and we'll be looking at the different levels here and there to determine where to re-enter the market in anticipation of the price, in anticipation for the price to head back up once it touches these levels. So now if you combine the Fibonacci retracement with, for example, smart money concept strategy, you could see that we get the 50% here, Fibonacci retracement that almost correlate perfectly with these P.O.I right there. That is kind of like between the 50 and the 60. So you could be targeting this point here, this demand area for an entry. Boom. It goes there, it goes in there, wherever you want to enter in there. You set up your entry point beforehand in anticipation for bounce, and so on and so forth. And now you have a successful trade. If you are a long-term investor and there's already been a long downtrend like this, and you don't mind investing your money and then seeing it, going into the red for a little while, well, this point, for example, would be a good point of entry, because you know that the upside potential could be greater than the downside potential when you take a look at it and think about it, you see, because it could bounce off of there to go higher, forming. Let's get rid of this tool. It's pretty cool, but I mean, it's pretty cumbersome at the same time. Okay, this could be forming here a cup and handle as well, which is very bullish, and just kick the price higher. to potentially I would see a nice POI like this one here being hit before it retraces down. And on the downside, we already highlighted this POI right there that could potentially confirm the divergent signal. So if you were to enter here, where would be the risk, right? What is the risk to reward ratio in as a long-term investor? Yeah, once again, I want to highlight the fact that it depends on people's strategies, all right? But look at that. Once again, if you were to target the all-time high, which would be right there, so you found a POI in the all-time high, the upward potential would be much greater than the downward potential, your risk basically. So your risk to reward ratio is very high. In the green, of course. All right, so let's get rid of that shit again. So you see there's many scenarios possible here, whether that be a cup and handle, whether that be like a confirmation divergent signal here, pushing the price higher and then retracing down to another POI within this trend here that would be forming within this trend here as the market hits back up. So yeah, so let's zoom in and move on to the next POI. Oh no, we didn't finish the first POI. So we saw that there definitely is a little POI right there. So on a 1 hour time frame. So once again, you guys, it depends. It's up to you guys to really determine which time frame works best for you, and you guys want to work with. And so yeah, do your due diligence and trying to mess around with these charts and the strategy as well a little bit to see which time frame POIs you want to target and use for your market analysis and to determine your entry and exit points. I personally use 1 hour. You know, I highlight the daily POIs and 4 hour POIs, and then I zoom in and I use the 1 hour to all the way down to 15 minutes at most, but 15 minutes to lower. Like I said, you're incurring the risk of missing out on the moves because sometimes you just tend to aim too high or too low. So here we're on a 1 hour, so we know that this one that we highlighted, say for example, exactly what I've just told you before. If you are scared to high, to aiming too high or too low, you know that this one would be a valuable one that people would be watching here, so you can highlight it. But then if you want to be more accurate, more thorough, you know that the very last, let's get rid of this little square right here, the very last candlestick up before it started to go down would be this one right here. So now you got two. All right, so that could be the first exit point, second exit point. So you put your, so if you were to want to get into the market short, so you wouldn't have got triggered here because as you can see, this POI here was slightly too high to get triggered. All right, so you would have had to trigger this bottom right there to get triggered into your short, and now you'd be in profit. That's why I'm saying it depends on what works for you guys and what y'all feel more comfortable with. So here we put the stop loss right above the last candle after the one that makes the POI that you are targeting to enter in. And then where you're going down to, that's the question. Well, you're going down to another POI that you calculated beforehand in the uptrend, which the uptrend being this one here. So we know that we have a POI right there. So that would be a good trade here to take. Boom. And on your way, man. It's a high probability chances for you to complete this trade right there. And that would be a very, very juicy, profitable trade here. Risking 1.91% to make 20.30%. So that's a huge return on investment here. All right, so let's move on to the next POI. We're gonna zoom in some more to see what's popping in this week right there. Fucking hell. Sorry for that, y'all. Alright, let's scroll through and find our sweet POI. There you go. There he goes. There he goes, friend. All right, cool. So we got this sweet little POI right there. Boom. This candlestick right here, I would use it as POI, knowing that there might be something up in here as well. All right. But you need to zoom in even much further, refine it to figure out where it is at now. In here, knowing that now you'll be very, very accurate, and then so you might get triggered less often than you might want to, and you might have to wait longer as well to get into trades. So that's something that you need to take into consideration at all times. All right, so I will, I will just leave it to you guys to, train yourself and practice on your charts and to try to determine which POIs you feel more comfortable using, which time frame you feel more comfortable with using, which one is the most profitable that makes you just takes away the fear and the anxiety as well of being involved with trading cryptocurrency or trading the market as a whole. And then you can just practice, do use a dummy account, test out your strategies and making sure that it actually works for y'all. And once you see that you can observe the market acting and reacting around those POIs or your POIs, is going to contribute greatly to building up confidence in yourselves and into entering the market or exiting the market at certain levels. All right. So I know I highlighted more POIs than that on this downtrend. So I just assume that, guys, you grasp the concept by now. It's really not complicated. If you need, just fucking rewatch the video. I mean, everything's in it, right? And you'll have no problem understanding it. If you got any problem, you always feel free to just comment in below, in the comment section, and we can talk about it further. That would be a good exercise as well for you to train yourselves on the, higher squares that we drew up together. And maybe you could just leave a comment in the comment section below this video and just tell me which levels did you guys see, which levels did you guys highlight as potential resistance, like POI resistance that you are watching on the way up once the market will recover and get back into bullish mode, and looking to exit for a potential pullback from these levels to re-enter slightly lower or even much lower depending on your bias and make more money in the process. All right, y'all, so I'm happy to have made this video for y'all. To be honest, I like this small money strategy trading, and I like observing the market and seeing that I'm right. Always feels good, doesn't it? So we'll wrap it up for today, and I hope this was insightful and helpful to you guys. If you got any value from this video, do not forget to like, subscribe, and comment, and turn on the notification bell as well to be notified every single time a new video is being published. So leave a comment below if you have any suggestions or any questions or any specific questions about what we just talked about, and you would want me to develop a little further on anything really. So just let me know. What else? most importantly, very important too, that would be very helpful for the channel. So I would be very extremely grateful for you all to do that. Just share this video as much as you can. Share this video with anyone you believe would get any value out of it, or is interested in getting into cryptocurrency trading or cryptocurrency as a whole, would like to just know more about any specific sector of cryptocurrency, and I could also develop on it. So on this positive note, see you guys in the next episode, and be safe, trade safe, train, study the charts, train yourselves, and make money. All right, peace out.
We're going to be talking about,